Thank you very much. We save 5 minutes. Okay. And let me just do a remark on your formula that you don't understand. From an economist point of view, when you don't understand a formula from the economics, I wonder if there is some political economy story inside this formula. Can be some bureaucratic calcula, some politician calcula, or most sadly some mistakes or bad luck.
I'm serious. I've tried to figure that out and to ask somebody. I get no answer which I can offer you, which makes any sense. So, but perhaps somebody else in the audience or here on the panel can help me. Thank you for this advice.
Thanks, Rowan. So let me give the floor to Philip Baker. Let me thanks before Philip Baker, before his speech, because I have an externality from Philips. There is a very nice high-pad time clock, very big, and this is useful for me for manage the time. Thanks, Philips. The floor is yours.
Right. Thank you very much indeed, Professor Mascandaro. Thank you very much indeed to the University of Bocconi for arranging this seminar today. I've been asked to look at the UK-Switzerland cooperation agreement, and I'm going to divide my presentation in 4 parts. I'm going to explain a bit about the background, look at the 5 elements that go into the agreement, then spend the majority of my time looking at the main agreement itself between the UK and Switzerland, and then I'm going to add some comments at the end. To understand the background, you need to understand a little bit about the position in the UK at the moment. We've had official estimates of the tax gap. That's how much tax is not being collected, which is due in the last couple of years. And the official estimates show about 39 billion pounds, so about 45 billion euros in 08-09, dropping. The revenue have been successful, it would seem, to 09-10 to about 35 billion pounds, about 40 billion euros. And that's just under 8% of all taxes uncollected. And that's uncollected because of evasion, people hiding their income, their tax money, people simply not complying or not paying, going bankrupt, and people involved in complex avoidance schemes. All of that adds up to that figure. Those are the official levels. Unofficial estimates put it significantly higher. There's an unofficial estimate that suggests the tax gap is as much as 120 billion pounds, something like 30% of taxes not collected. I suspect that the reality is somewhere between those two, probably nearer the lower figure rather than the top figure. I'm not going to ask you what similar figures in Italy would be and whether they differ between the north and the south. But we have a significant tax gap, and one of the roles of HM Revenue and Customs is to try to reduce that. And there's been a focus on people who are hiding funds overseas and trying to regularize the position. We don't do amnesties in the UK. We never have, and we still don't. But what we do have are disclosure facilities where you can come forward, pay the tax, pay a fixed penalty, you don't go to jail, and you regularize the past. And we've had a number of these facilities. We had one between 07 and 08, and that raised 400 million pounds in undisclosed taxes. So a relatively low figure. We backed that up by disclosure from a significant number of banks with overseas branches. 146 UK banks disclosed information about offshore branch accounts, and that led to a second new disclosure facility started in 2009, but which so far has raised a tiny amount, 85 million. We do have a special arrangement with Liechtenstein. This started with the theft of information about Liechtenstein bank accounts, which was bought by the German Secret Service and then sold on to the British. And so we reached an agreement with the Liechtenstein government to introduce a disclosure facility for just over 5 years. Someone who uses this facility pays 40% as an average rate, or if they can show that their actual tax would have been less, they pay less. They pay a 10% penalty. They have a guarantee of non-prosecution. It's currently available, and what's amazing about it is that it applies to worldwide activities. Anybody who wishes to use this can simply go to Liechtenstein now, create a meaningful relationship, and that is the term that is used, with a Liechtenstein banker. And then you can go to the revenue and you can legitimize your money anywhere in the world. So I have been evading tax for years. I have my money in Panama. I have never been to Liechtenstein. I don't even know where Liechtenstein is. I form a meaningful relationship with a Liechtenstein banker, and I then go to the UK revenue and say, I'd like to regularize this. Will you give me my get out of jail free card? And you get that under this facility. So, as I've said, the UK doesn't do amnesties. We do disclosure facilities. We don't have any constitutional restriction on any of these arrangements, though perhaps we ought to be more aware than we are about EU law. We do traditionally settle many of our tax disputes by agreements, and we seldom prosecute, though the revenue are not the only body that can prosecute in tax matters. And one of the background factors which is quite important is that in the last year there has been a great deal of disquiet about the revenue settling tax disputes for a fraction of the tax due. Vodafone, Goldman Sachs, these are big companies that settled large tax bills with relatively small payments. And there's a parliamentary committee that's been very unhappy about that. That's part of the background to the agreement. I thought you might like to see a little picture here. In the middle, that's our tax minister, David Gorka, signing the agreement with Switzerland. I can't remember the name of the nice Swiss lady. It is right, Mrs.
Widmer Schlumpf.
Yes. Frau Schlumpf, can I call her? And it's all being looked on by Dave Hartnett, the head of the UK Revenue. And there you are, he's putting his signature. And there is Frau Schlumpf leaving leaving there looking like a very happy lady who has walked away with the crown jewels. So what did the agreement contain? There are actually 5 parts to the document that they were signing. There is the main agreement that I'll look at in a moment. There's a joint declaration concerning equivalence, which says that the agreement will have, and I quote here, an enduring effect equivalent to the outcome that would be achieved through an agreement to exchange information on an automatic basis. So this is supposed to be the same as automatic exchange. I'll leave you to judge whether that's true or not. There is also a declaration on stolen data. The UK promises that in the future we will not actively seek to acquire data stolen from Swiss banks. So we have acquired stolen data in the past, and you may ask, is it right or not for a government to acquire stolen data? But clearly the Swiss banks don't like their employees making extra money on the side, and we've promised not to encourage that. There's a side letter about criminal investigations which says that somebody who uses this Swiss facility is highly unlikely to be subject to a criminal investigation by HMRC. Note, that's not an absolute guarantee. With Liechtenstein, you get an absolute guarantee. Frau Schlumpf missed a bit here. She didn't get an absolute guarantee. And finally, there's a memorandum on financial services by Swiss firms. As Xavier mentioned, Swiss firms believe that they have not had full market access, and this memorandum explains how Swiss banks are to go about marketing their financial services and how they will meet regulatory rules going forward. So we've got several parts to the agreement. The main core of it, though, is the agreement signed on the 6th of October, not yet in force. So you can't yet use this facility. It probably will come in force on the 1st of January next year. The key implementation is by the Swiss bank, the Swiss paying agent. The taxpayer remains anonymous. The bank does everything on their behalf. It applies this agreement to assets that were already in Switzerland at the end of December 2010 and have remained there. So you can't move yourself into this agreement, sadly. You've got to have been evading tax in Switzerland at the end of 2010, then you can use it. It only applies to individuals who are the beneficial owners of assets in Switzerland. So it has, as some people have commented, more loopholes than an Emmental cheese. If the assets are held under a discretionary agreement, you cannot identify the beneficial owner. A discretionary trust, a discretionary foundation has no beneficial owner. Corporate assets, unless you can effectively look through the company, are not included. Assets held by an insurance company in an insurance wrapper are excluded. The other night I happened to be attending a lecture in London, and I talked to the person next to me about the Swiss agreement, and she said, "Oh, we have a solution, a Liechtenstein insurance wrapper. If you want to keep evading tax, just put your assets into a Liechtenstein insurance wrapper." And I suppose, by the way, that also means having a meaningful relationship with a Liechtenstein insurance person. Yeah. What are the elements of the agreement? They're very similar to the ones with Germany. The first element is clearing the past by the customer telling the bank to exercise one of two options: either the one-off payment or disclosing the customer's details to the UK government. The one-off payment has this incomprehensible formula. The rate runs from 19% to 34%, but the average is likely to be about 22%. Small note, if I were to look back over the last 10 years, I've probably paid in taxes about 50 to 60% of what I charged my clients. If I had known that I could get away paying 22%, oh, I wish I'd gone to Switzerland 10 years ago. Yeah. It applies to all major direct taxes, and as a sign of good faith, the Swiss paying agents have agreed to pay the UK government an upfront payment of 500 million Swiss francs as an advance payment. Big question mark is whether the UK will ever get any more than that. The general view is no, they won't. That is all they will ever get out of this agreement. The second element is going forward. If you choose secrecy and you don't disclose, then the cost of that is that tax will be withheld by the Swiss bank on different types of income and paid over to the UK. The rate is slightly less than the normal top UK rate. So on interest income, the top rate is 50% in England. It'll be 48% withheld. Dividends, other income, they have other rates. As the interpreters are outside the room, could they please tell the students outside to be quiet? Get that. The third element of the agreement is cooperation between the Swiss authorities and the UK. We already have provision under our treaty for exchange on request. That's now elaborated. The UK can request information if they have identified a tax risk and they've identified and notified the taxpayer they are investigating. But if that taxpayer has elected to have the one-off payment and the withholding tax, then no information is to be supplied. So you maintain your secrecy by agreeing to have the one-off payment and the withholding tax. There is, as was mentioned, a maximum number of requests that can be made, 500. But if we make bad requests and they're unsuccessful, the number drops. If we make 100 requests and less than 1/3 are successful, then our maximum drops for future years. So we can only make good requests or we're penalized. Other elements of cooperation: Swiss banks promise not to encourage the use of artificial arrangements for the sole purpose of tax avoidance going forward. You might have thought that it's the role of bankers to bank rather than sell artificial tax avoidance arrangements, but they promise not to do that in the future. Swiss banks will be audited to see whether they're maintaining this. There'll be a joint commission between the UK and the Swiss government to oversee it. And just as Roman mentioned, if people take their money out of Switzerland and send it elsewhere, then the Swiss will identify the 10 major recipients. Professor Mascandaro, can I ask you to be a witness, please? I am now handing to Xavier a list of the 10 countries to which the money is going to move. Because I know, and you know, and he knows what those are. If I get all 10 right, Xavier, will you pay me 10 Swiss francs? If I get none of them right, I'll pay you £100. Do you agree?
Yes, but I would add that if there's 3 countries for which you are wrong, it's 15% drop. Okay?
Okay, so you pay me less than 1 Swiss franc, or 10 Swiss francs. Okay, fine.
But for the rest, it's okay.
Right.
Okay. The deal is done.
It's a deal.
It's a deal there. It's not difficult to tell who those 10 are going to be. I don't think Xavier is dissenting from my suggested list. Okay, some comments quickly on the agreement. The UK government expects it to yield between 4 and 7 billion. So between 10 and 20% of our tax gap. But they don't say over what period that's going to be collected. Is it over the next year, or the next 10 years, or the next 100 years? In any event, most people think it's hopelessly optimistic. Previous disclosure facilities didn't even raise £500 million. Why should we expect this one to raise so much more? It allows and guarantees future Swiss bank secrecy. If I either put my money into a Liechtenstein insurance wrapper, or I pay the lump sum and the withholding tax, I keep my account secret. Why? Why should the UK government wish to preserve Swiss bank secrecy? No one has explained to me why we should have this. I bank in the UK and in France. If I'm investigated by either revenue authority, I know that they can look at my bank account. I accept that. I expect them to keep that information within the revenue and keep that from leaking into the public domain. But I accept that the revenue authority have the right to see that. Why should Switzerland be different? There are major loopholes to the agreement. Romans mentioned it, I've mentioned it as well. Big question mark is whether people will actually use this, given that the Liechtenstein facility is so much more attractive, and it's now available, and it gives you a guarantee of no prosecution, but it doesn't keep secrecy. It does give you disclosure, and so you're known for the future. Is it compatible with EU law? I'll leave that for Frans van Eestendal to deal with. I will just note that there's a big question mark as to whether the UK government even thought about EU law when they entered into this agreement and what the quality is of the advice that they're getting. I put down as a question mark, is the UK way better? Is it better to prosecute a few Swiss bankers from time to time pour encourager les autres? You remember that Candide arrived in England and saw them shooting an admiral of the fleet. And he said, why do you do that? And they say, we shoot an admiral from time to time pour encourager les autres. The big question is now, will other countries follow suit? It's been mentioned maybe Greece, maybe Italy will enter into similar agreements. Well, we all do silly things from time to time. I don't need to tell you that. You've had Berlusconi as a prime minister for many years. We all do silly things. Will you follow suit on this question? A last comment. We have the agreement, but we need legislation in Parliament to support it. That legislation will be passed. The UK government has a majority, but it's a question of how much damage it may do to them if they push ahead with this agreement. So it's not an absolute certainty that we will have the agreement finally concluded. Those are my comments. Thank you very much indeed.